Greetings all, Ben here, East West. This is going to be my first dive into analysing cannabis stocks. I have been doing a lot of work in uranium, but I thought I'd branch out because it looks like we've got a space here that's starting to show some very interesting signs, as you will probably well know if you're already watching this video. So if you haven't watched any of my stuff before, come on in, see what you think. If you do like what you see, like and subscribe would be appreciated, because it lets me know that I'm creating content that's actually giving some value to people. So look, I keep things pretty basic. I just base a lot of my work around trends, areas, structures, a little bit of Elliott thrown in, but not slavishly so. So come on in and have a look. I mean, a little bit of geometry, a little bit of all sorts. So hopefully I can show you something that you may not have seen or considered before, or even just consolidate your own ideas, whichever way happens to give you, hey, look, maybe you might come and say you're completely wrong. But as long as I provide value for you in some way, shape or form, that's all I'm after. So let's jump in. I'm just going to do two today. I'm just going to do the MSOS ETF, and I'll probably have a look at CURLF as well. So let's just jump in, look at the price structure and see what we can see. Okay, just starting off here, MSOS. I like this chart. What do I like about it? Well, at a very basic level, the move up, the move back down, even though I'm not mad about this structure. A move up that breaks the high, a move down, so far we've held, and so what have we got? We've got a sequence of higher highs, higher lows, the very genesis of a trend. Now, I'm not mad about this, because I tend to think when markets move up like that, it's very nice if you're long at the bottom, but when they move up that quickly, they tend to puke quickly as well, as we've seen here. But what I like about this one is we've got nice swing structure coming in here, okay? I like the building block. I like the building block scenario. I like markets that trend up, trend down, trend up, and where there's internal swings all the way through. That to me is what I want to see in a market, because it makes me think that yes, we've got something here that's a bit more sustainable, that builds a trend, and every pullback is just a chance for the buyers to digest the sellers, for the market to stabilize, accept prices, and then move on higher. So I think the only problem we got here is that because this looks like a relatively explosive situation in the offing, we might get another massive rip up, but we'll deal with that if and when it happens. But nonetheless, I just think what's building here looks really good. Now, the second thing, well, look, even before I move on to that, I mean, just look at the trends. I mean, there's two ways you could sort of trend this up. That's a nice trend line. You could take a parallel off the top. That's probably the way I would do it, but we don't have an awesome trend channel just yet, because trend channels, in my opinion, are better when each side is tested as we move through the trend. We don't have that yet. So another way we could do it is we could take this trend channel, okay? Not quite as steep, maybe not quite as sexy, but once again, it's the same thing, okay? We've got the touch at the bottom, we've got the touch at the top. We probably don't really want that touch at the bottom. So this one is possible, but it's out for me. I'm going to concentrate on this one, because I think this is where the nice swing structure is coming into play. So the other thing I like about this is we've got some really nice retracement play coming in here. So if we just look at this one, okay, we came right here to the 61.8, which is exactly where you want it. For me, anytime I see a move like this, you want to see a pullback. It doesn't always have to happen, but if you see it like that it holds and then breaks this high, I just always think that looks like a really good setup. And now, without bogging down too much into Elliott wave, every time I see this where we hold and then we start to break, I'm always sort of thinking about projections. Now, these are not predictions. They just become areas of interest. But what you find when you do this, it's amazing how often the market will get to this area and just stop. And sometimes it doesn't stop. It'll stop and then it'll just keep going. But it's amazing how often it'll pause there. Okay, so if you're on the move, always around this 161.8 to 175% is always an area to pay attention to, even if you think Elliott wave's crap, because this is actually an Elliott wave projection. Okay, if you were doing Elliott wave, you'd be thinking 1, 2, 3, but this is kind of fluffed out because we've got 4 that's come into the price range of 1. I'm not going to get into that, but that would be the first point of call I'd make. So the reason these can be handy guidelines, let me come in here to a shorter time frame, is you see them all over the place. Okay, so let's look at a few of these. Look at this move into the retracement extension, off this pivot to the 50 extension. Okay, let's go off this pivot. A little bit of a break there, but like I said, if we take it off, say this pivot, okay, from this pivot to this pivot we held, if we bring this up here, we've just broken, but we've gone through. But you can see as we swing higher, and we're on an hour here, as we swing higher, you can see that it's quite a good area to pay attention to as we go along. So, we had this good trend up with that good structure internally, and then what do we get up here? We've got, well, this one went right to it there again. Now this one didn't quite come as far, but what did we get? We got a move back into the retracement zone, and we got almost perfectly a 1-to-1 move. Okay, so this leg was almost exactly equal to this leg, okay, with this nice retracement back into the zone. Okay, that's a nice setup. Okay, we've got a move up, a 3-wave move back with a 1-to-1 move, and where did this 1-to-1 move terminate? Right into the retracement zone. Okay, that's where we want to see it. That's why, for me, that's a good setup. Just very basic. I don't think it has to be any more difficult than that. That's just a good setup. We've got a good pump away. We've got a gap here. I'm not going to do gap analysis today, but that's what you want to see. That's good. And so we've got our setup. We build our trading plan. So what would we think about? Well, the first thing I would do from here, knowing that I've got a good move up and a move back, all I've got's a setup, nothing more. But if I was long, what would I be thinking from here? Well, this is all I'd do. I would just measure the length of the move up, project off the bottom of the move down like that. Then I'll just change this up to show some other levels. Okay, so I don't know what's going to happen, but what would I do? I would just simply start marking off some of these areas that would be of interest to me if the market was going to move higher. Okay, that would be an area of interest, and so would that. Okay, that ties back into a little bit of Elliott, because that would be the second highest probability of the extended wave. Okay, when I say the extended wave, I mean the next wave higher. I'll need to mark off a few more. So, what else? This is the high probability area for the extended wave when you think about Elliott up here. Okay, so even 200%, I mean, you could mark that off too. Okay, but what we've got here, we've got quite a few areas here that could create some interest if still a big if, because it hasn't happened yet, if this market is going to go external. Okay, so we've got these areas of interest. Can we tie them into something else? Well, what we need to do here is to look left. Look at the recent history of the market. What have we got? Well, there's not as much here at the 100%, but here, this is going to be a broad zone of interest. Okay, and look what it encapsulates. The tops here. Okay, the way that it's come in here and touched this between $14.50 and $15.15, that would be pretty much my first serious level of interest. That would be a point where I'd be looking at the market and you'd be thinking, if it gets there, how fast did it get there? What sort of structure was in place to get there? How has it gotten here? What sort of structure is it put in place to get to this level? Okay, this is part of laying the plan. But what we do know is this would probably be the first point of call area. So even looking at this, I mean, you would almost say that this is, what do we got here? This looks potentially okay as well. Let's look at the bottom of this. Where does that line up? It's just above that point of interest, isn't it? Okay, so it's just above that zone where we might have another look here, okay, which would be just through here. Okay, that's just missed. What about here? Well, that's kind of missed as well. Not so much there. But the other thing I would probably suggest too is, even though I can almost see it, I don't think there's going to be much in the way of retracements there. But let's have a look. Okay, so thinking about the move from the top, from February 21 all the way down to the low, the first retracement point splits our point of interest higher here at the 23.6% retracement. So that, what I would do from here is go, okay, let's clean this up a bit because there's a bit too much going on here. They would be my first points of call. Okay, that's just what I'd be looking at. These would be my two areas. This would be my plan. These would be my two areas. If I was in here or if I was going to get in, okay, what are you thinking about? Where's your stop? Well, it's up to you. I mean, the potential stop points, I mean, you could use that. It looks pretty easy to get to. You could use that, maybe. Or if you really wanted to play the long game, you could probably use the bottom, because I would think that if it breaks the bottom from here, then something's gone wrong, right? You probably don't want to be involved in the sector. There's something's happened that's unforeseen, and it's not going to do what we want it to do. So just think about it. Even if we gap up tomorrow, even if your entry here, right, is at $9.71, which would be a fairly good gap from the close at $8.96. But even targeting these areas and using the bottom of this as your stop, you still got a 2-to-1. Okay, you might want to go to the top of that. All of a sudden you're at 2.25. You might want to target halfway between here. You're at 3, and that's using that stop. Okay, if you wanted to be conservative, you probably, even here, you're risking. You're trying to make more than you're risking, and you've got a lot of downside there. Okay, and there's nothing to say it stops here. It could go a lot further. But just think about how much you're risking, about where you think the market could get to. Okay, and if the market does, okay, think about it this way. If the market does start to do this and you're long, okay, maybe we get to this sort of point, you can look at the pivot points along the way, and you might think, oh, maybe there's a pivot point, maybe, oh, gee whiz, maybe, because you've got to readjust your stops. Maybe we pull back to here and you think, oh, okay, well, look, if I break this structure here, I probably want to get out, and my target's still, well, even if it's here, okay? So now your trade's looking like a 2.25 to 1 risk. Okay, that's how you keep adjusting the risk. But as you read the trends, okay, you can just see where the risk points start to form, where the structural areas are that you probably want to pay attention to. Anyway, enough on that. Let's have a look at some CURLF. Sorry. This one's a little bit different, in so much as we do have similarities in terms of we've got the nice swing structure, and we had a nice retracement and a nice 1-to-1 move to set up that nice bit of trend. So that was good. Coming back the other way wasn't quite as smooth. We got a bit of a deeper retracement, and then we got this longer extension that didn't quite hit the 61.8. But when we look at the overall move, we came right back to the 61.8. So we are right in the zone. This is where we want to be. This is the sort of area where we're looking for it to hold, and it's had a very good reaction away from there, and that's what sets up, in my opinion, sets up the trade. Okay, now this one's slightly different, so I'd look at this a little bit differently, in so much as when we look at the ETF, we had this move here, but this corresponding move got higher than the high, whereas this didn't. So we've sort of double topped there. Okay, so what we've kind of got here, well, not what we kind of got, what we do have is a double top. Okay, and it's not quite a double bottom, is it? But it's pretty darn close. Like, it's almost like a triple bottom, isn't it? Because we've held this area. And look, you're probably arguing about, when you come right down into this, you'd be arguing about pennies, right? Like, what's the low here? 257, 251. Like, there's not much in there. It's very quick. It came out of there pretty quickly. So, these ranges don't have to be exact. I mean, even this one is probably not exactly a double top, but you get the point, right? We're kind of contained within an area where we've had multiple tests up and down. So we've tested. This time we've held, but we're in a range. That's how I'd look at it at the moment. Even though within this range, what we got, we do have what looks like a very nice forming uptrend, because the structure of what we're seeing going in here looks very, very neat. So when I'm looking at this, you can sort of apply the same techniques that we applied on the other one, but because we've got a bit more of a range, I'd be looking at this and thinking range expansion. What is that going to tell me? So here's our range. Okay, now one of the principles we can sort of use here is that if and when we manage to break this range, we can expect this range to be replicated, that price will replicate that range and travel the length of this range again. Okay, here's the range. Take the range, expand it up another 100%. Okay, and there's nothing to say that it won't do that again. Okay, and that range expands 200%. And this is how we tie it in. So if we were going to get an extended range, that just ties in. Don't look for exactness, right? It doesn't often happen exactly, but you can just see as we come in here around this sort of $9 area, how we start to get some confluence, some overlapping interest in terms of what's going on here. Now let's look left. What else have we got going on here that could help us? Well, I'd probably suggest that lining up with this sort of area, you've got some nice sort of wicky tops through there. Then all of a sudden we've got an area. Now look, I mean, yes, I would certainly be paying attention to that as well. And what that would bring into play is the 1272 to the 1382, which is also an extension target. So that would be a point of interest. But that doesn't really play into the theme of range expansion as much. But there's nothing to say that the market couldn't move up like that, dilly a bit, and then still get up there. Okay, it's not going to do it in a straight line. So now we've got some levels building on top of each other, and we've got some areas building up where we might be interested. Now, what else is interesting here is that we've got the 261.8 extension, and this does happen on occasion. You will see a move that extends 261.8% of the original move. A big rip. And this is probably the sort of market where it's more likely to do something like that. Okay, so this would be like the ultimate. Okay, but when you do this, what else can you grab off that? Is there anything, if we sort of just box this little area up and pull it across, what else have we got? Not so much. We got that, maybe tie into that. So this is a little bit broader, of course. We've got some tops here. I wouldn't be too excited about that. But let's look at the overall move and see where these sort of things are falling. Okay, this is forming right at the 61.8% of the whole retracement from the bottom back up. So that would become a very serious point of interest, a broad area where you would be thinking long and hard about what's transpired, how much more do you think it's got to go? Because at the end of the day, I mean, just say you were long from here and the market got there, what are you looking at? You'd be looking at a 220% move. It's not bad. I mean, how much do you want? Look, there might be way more in it, but this is just how you would draw up plans and just to figure out what sort of areas, when the market gets there, do you need to stop and think, okay, what can I see so far? How has it gotten here? How much time has it spent? Has it had enough time digesting? Am I going to have to anticipate maybe a deeper drawdown or retracement? And if I get that, does history tell me that it's still much more likely to go back up? So therefore I can mentally take the drawdown and not bail out at the wrong time. So look, that's just a little entree into sort of how I slice and dice it up and think about things on the bigger picture. This is probably a little bit messy at this point, but what I would do is I'd have my broad picture like this, and then I would just stay in tight and just watch how the structures build to make sure that it's still tracking the way that I want and how I want to see it tracking for it to reach some of those higher targets. So look, I'll just leave it there. So hopefully you can get a bit of a handle on what I'm trying to do here. As time goes by, I'll probably introduce more and more sort of different techniques to help identify where we're going and what we're doing. But if you did like this sort of thing, if it made a bit of sense to you, if it all goes together, then hit like and subscribe. I'll know I'm on the right track, and we can go from there together and keep a handle on this cannabis market. So thanks for watching. Hopefully I'll do another video because this gets a bit of like and subscribe action, a bit of traction. And if so, I'll see you in the next one. Bye for now.